Hello, everyone, and thank you for joining us for today's presentation as part of the Industry Insight webinar series. The topic this time is a 6-step guide to better legal bookkeeping. Speaking today will be Rick Cabro of Cosmolex. Rick is the CEO of Cosmolex Cloud, a web-based law practice management system designed for small law firms. He has a PhD in electrical engineering and has over 12 years of experience in the legal software industry, catering to the specialized technology needs of small law firms. Rick is the co-author of the book Law Firm Accounting Demystified, has given hundreds of seminars, and has published numerous articles on legal technologies related to law office management, cloud computing, legal billing, and business and trust accounting compliance issues. Rick's passion is helping attorneys use technology to simplify their law firm operations. Under his watch, the Cosmolex platform has grown to include all aspects of law practice management and is being used by thousands of legal professionals in the US and Canada. The presentation today will be followed by a Q&A. Please enter your questions into the question box in the webinar panel on the right side of your screen. All questions will be addressed at the end of the presentation. We're recording this webinar and we'll be sending a video and a follow-up email in a few days. We'll also post a video on our blog at www.lawtechnologytoday.org. Thank you all for joining us. We'll now begin the webinar.
Thank you, Austin. Good afternoon, everyone. Today, as we just heard, I would be talking about very specific 6 steps which you can use to simplify your legal bookkeeping. Now, I know the timing is short and there's a lot of material to cover, but my goal today would be provide a very high-level overview. You know, what is legal bookkeeping, why it is important, what normally goes wrong, and what can you do about that. So with that, let's begin. So the agenda for next 30 minutes, what is legal accounting? So we're going to take a couple of minutes on that because sometimes law firms are under the confusion that, you know, what works for a restaurant or a hotel or a motel or another service industry might be applicable to them, which generally is not the case. So it's good idea to just at a very high level talk about the main components of the legal accounting. We're going to then go into 6 steps, not hundreds of things which can go wrong, just a very high level of plan for a legal bookkeeping. Timing couldn't be perfect, with the year ending, there's always a good opportunity to get a good handle on bookkeeping, and the year end is the perfect time for that. And how integrated accounting can help, and we'll touch upon that throughout this event. So with that, let's kind of dive into make sure that we are all using the same nomenclature, right? What is legal accounting? Now, legal accounting to a large degree includes 3 components. The business accounting, this is also known as a back office accounting. This is your facility, the payroll, the paper, the computers. This is the accounting which is handled by each and every business. This is where you book your revenue, your expenses to the profit and loss, assets and liabilities and all that. So nothing fancy about it. This is what every business is required to do. There are many general purpose business accounting systems out there. QuickBooks is one of the most popular one, which are designed for business accounting purpose, right? But that's not the end of the story for law firms, right? There are 2 other components which are distinctly unique only for the practice of law. And today's presentation is all about that, because this is about practice of law. We're going to spend a lot of time about talking about these uniqueness. So first and foremost is the matter, cost, and income accounting. Because you are dealing with cases and files and matters, and there are oftentimes costs associated with that, the money which you spent before and then you collected later on, and associated reimbursement for that, that's a whole different accounting, class in that. And that is not something which you can easily handle in a general purpose accounting system. And it's important to know, what that means. And then the third component to it, which is even more important, fee advances, retainers, law firms and legal fees and legal cost advances, and going those into the retainer accounts is not uncommon. It is a very, very common practice. However, what is not common is the accounting to be done properly for these funds, and we'll look into that. Now, these are not isolated components. They're not like business accounting has nothing to do with the cost accounting or retainers. They are highly interconnected. What you collect first as a retainer gets applied later on to the invoices. What you spend money on your cost, whether it's paid by credit card or by check, gets billed again back to the client. When client reimburses back, it goes up in your P&L, but it doesn't go up as an income because part of that is a cost reimbursement. So one of the challenge with the small law firms is to really understand the complexity behind it. End of the day, before you're a lawyer, you're a law firm, you're a business, right? And business has to comply with these requirements. Part of these requirements are driven by from an IRS perspective, and part of these are governed by the local ethics requirement, how you handle your retainers and accounting and all that, right? So we'll try to get into that flavor. So again, keeping the fact that the timing is very short, let's dive into 6 areas of simplification, 6 things you can do to get a better handle on that. Now, it's quite possible maybe all 6 doesn't apply, maybe 3 applies, maybe 4 applies, but take whatever you can from this. Nothing beats the number 1, which is enter data once only. This is the root cause of problems at thousands and thousands and thousands of law firms. And now, remember, the challenge for a small firm is very different than a large firm. Large firm will have an accounting department, they'll have bookkeepers, they are checking and rechecking and double checking everything. Well, for a small firm, you don't have that option. You are that person, you are everything, right? So you want to make sure that whatever system you deploy, you don't enter these data again and again and again, right? One data in this system, another data in this system. Once the money comes back, again goes back here and goes back there and all that. Figure out a way to connect these systems in a simple way, and if they can be connected properly, or look for an all integrated system, something which is designed for lawyers. If you enter data more than once, you are almost guaranteed that mistakes will be made sooner or later, and those mistakes will be very hard to correct, because one system will say something else, another system will say something else, and in a sea of data, now you're trying to figure out what happened to that $11 discrepancy, which you can't figure it out, right? The only way to win that battle is figure out a system, a solution for your firm where you are entering data once. If you're not, then it's very hard to overcome that part of that problem. So that's the number 1 step. There are various ways to achieve that. There are various legacy systems, desktop systems, which are amazingly well designed for this purpose. There are cloud systems out there which you can look into, as well as you can figure out a way to integrate if you're using a separate system for accounting and a separate system for billing, figure out a way to make it work together in a nice way. So that's how you can overcome that. The second thing, client funds, handle with care. That's the second most important thing. Client funds are not your funds, right? Whether these are going into your trust account or business account, if allowed, a proper due diligence is required. Now, what does that mean? So let's kind of take it a little bit into it. Now, there are 2 types of client funds. Operating retainer, which are basically the advances being deposited in your general business account, and trust retainers, which are advances which are going into your trust account. Now, before you many of you jump and say, what do you mean operating retainers? Do know that there are 13 states which do permit the operating retainers. There are New Jersey, New York. There are many states where law firms are permitted to take fee advances, cost advances, and deposit right into your operating account. So, and many states don't. Most states don't, but many do. So you need to see your situation. So just because if you are accepting advances on your operating account doesn't mean that it's your earned income yet, right? These are still booked as an asset, basically when you deposit it, so that they become income once you earn it, unless otherwise it's a funds you're holding for your clients. They're a liability to your account, and the balance sheet, that's how they show up, right? No different than the trust account. Even if you use the evergreen retainers, like replenishment of the retainers, to make sure that you maintain a minimum, they follow the same thing, right? So from an accounting perspective, there virtually is no difference between trust retainers or operating retainers. It's just your convenience. If you put money into your business account, then you don't have to move it around later on from trust to business. But you absolutely should use operating retainers only when you are permitted. If you're not permitted, and again, as I said, most states do not permit, there's not a question that you should use that. Then you should just focus on the trust retainers. Now, when the trust accounting goes, make sure that you know the basics of trust accounting, maintaining like a separate trust account. Now, it doesn't mean that you maintain a separate account for each client. You can have a one pooled account, one trust account, but you just need to know the balances for each and every account really well, right? These are still revenues not earned. These are the funds you are holding for clients, real estate advances, probate funds, your fee advances, even the cost advances, things like that. So these are the funds which should never appear on your profit and loss, right? They are not your money. You have not earned it. They are on your balance sheet as a liability, and that's how they should reflect. Your entire trust account balance should match it with your. So on one side you will have a bank account, which is an asset account, and on the other side you will have a trust liability, and they should match penny to penny. And it's not just that. Beyond that, you need to know exactly the balances for each ledger. There can never be an overdraft, the three-way reconciliation reports, all that 9 yards. So again, we are not going too deep. I can speak 3 hours just on trust accounting. Today is not that time, but make sure that you have a good handle on that. If not, read about it. Towards the end, I'll also give you a link for the book which I published. You can get that at no charge. It's about 100-page book. This probably is the only book written just for the legal accounting, from what I can see. So see if that can help you in getting good handle on your accounting. Okay, let's go to step number 3. Stay on top of client costs. So we talked about the fee advances, we talked about single data entry. Client cost, really important. This is not uncommon for matter expenses to be paid from paid from somehow, but then they fail to get posted in your billing. You might have incurred the charge from a credit card statement doesn't come for another 30 days, or you might have written a check while you're outside the office, and back in the office maybe it never got posted back to the client cost, right? So it's really important that you have a system which is designed for that. You are otherwise there is nothing worse than not tracking your time and not billing for that. The only thing worse than that is losing your money on your client cost. Why? Because this is the actual money you are spending. It's not even your fee income, right, which you're losing. It's your cost, the money you spend, or the parking charges, the various type of client related cost, which you just forgot to bill it back to your client. So again, you need a very tight system for that. Oftentimes when you're using one system for accounting, that's where the credit card balance will come, statement will come, another system for billing. You can forget about that. You might miss about that, and things can happen. So ensure that they get booked properly, ensure that they get accounted properly. So let's talk about that. What does that mean, right? So there are two types of matter costs, right? One is a hard cost, which is the money you are spending now. You're charging that $400 client fee, the court cost filing fee for a client. That's the money you are spending right now. That's a hard cost. That's called. And then there's a soft cost, which is really the money you already have spent, like photocopy charges, telephone charges. You're already paying for that from your general office expenses, but a part of that gets allocated back to the client, right? So like if you are let's say charging $17 for photocopies, well, you didn't spend $17 just now. You bought the papers and copier much earlier. So from an accounting perspective, it's a whole new game. From a billing perspective, it's the same thing. Client sees the charge, they pay you the charge. But what happens from an accounting perspective? If not properly set up, it becomes a goose chase, because one thing you are spending money now and collecting it back. Another thing is you are collecting it now, but something you spent way back, different game. So that's why this is separate. Just a quick example on a posting wise, how it might look like. So let's say you have an hourly case, and let's say you have a filing fee of $57, right? That might go to a reimbursable client cost. This might also go to advanced client cost. That's something you and your accountant needs to decide. It has a different meaning from an IRS perspective, right? But it's a simple example here, which I'm posting it to a reimbursable client cost. But on the other hand, let's say photocopy charges, which you are just doing something in your office, or you're charging it to what's called in-house indirect reimbursable client cost. Why is it indirect? Because it's not a money you are spending now. When it comes back, it's going to look very different on your income statement. Auto mileage, you drove $65. It's a client related charge, but let's say you are not charging it to your client, but from a booking wise, you can book it on a non-reimbursable client cost. So just a flavor of how these postings are very important. Again, if you don't get a handle on these charges while these charges are being incurred, while these charges are being entered, this is literally impossible to get a handle on later on. When these money starts to get paid back as part of the billing and reimbursement, and you try to do the accounting at that time or try to balance out your general ledger, it's simply not going to work. You really would need a system or a setup which can tighten this at the time of entry itself. And again, remember that first principle. You should be only entering it one time. If you're going to your accounting system and saying I'm paying a check of $57, then you are going to a billing system and I'm saying, yes, I paid a check of $57 from somewhere else and billing it. And when the money comes back, you can see that there's no way to win this battle in this context. Okay, we are about halfway in. So we go to the step 4. Ensure payments are being allocated properly. Again, very important. The bills which are going out to your clients is not just the fee income. It can include taxes in some jurisdictions. For example, New Mexico, for example, Canada. It can include your fee. It will include your fee. It will include your cost. In the cost, it can include soft cost or hard cost, right? Two different type of costs. It can include even in the hard cost. It could have your accountant might have advised you that use advanced client cost, which is kind of the preferred way, cleaner way from an IRS perspective, or they might have advised you to use reimbursable client costs, which is a little bit different meaning to that. So that might be a difference there. Then you might have a late fee, you might have a discount, you might have a finance charge. So my point is that invoice is not just something which is, hey, it's a $1,270 invoice, client paid, just record it, right? The money needs to be broken down, and it needs to be broken down invoice by invoice by invoice. If you don't, all of that will look like a fee income, which is not the case. You will be artificially inflating your income, probably your taxes, things like that, right? But so again, you need a system. Just like you need a system to incur the charges, when those charges gets paid back, the system needs to know how much was paid back for the fee, how much was paid for the cost, how much was for the discount. All that has to happen. Otherwise, every single invoice payment, you'll be adjusting it manually within your system. And again, something that's where the errors get introduced, that's where the balance sheets gets messed up, and that's where in the end, oftentimes at small firms, no one knows what happened, right? There's a bunch of loose data entry, except no one knows, like, what was really income, what was really cost. And there are serious IRS rules around that. When you incur cost on your matters, IRS doesn't consider that to be your office expense. IRS consider that to be a loan to your clients. It's not something you can take in deduction in your tax returns, right? And as the loan gets paid back, you're basically issuing a loan and collecting it back. Different concept from an accounting perspective. So something to keep in mind. This is generally the flow. When the money comes back from the client. Now, let's say you issued $1,270 invoice which had all these components, and your client paid $1,270. You wouldn't have much of the issue because all of these get paid, and you will be able to book it properly, and you don't have to worry about that. But what if client only paid $670 and the remaining will be paid later on? Well, how would you allocate that? What goes where and how and what order, right? It's very, very important that you follow this kind of process because the tax liabilities get paid first, and then the loan which you issue to the client, advanced client cost, reimbursable client, your fee income is in the end, right? And from an allocation perspective, and whatnot. So next slide is an example. When the filing fee, the one which we booked it to reimbursable client cost, when it gets paid back, it gets booked to a separate income account called reimbursed client cost. This is not fee income. This is reimbursed client cost. This way, when you look at your income statement, you don't get overly excited because part of that money you are getting is only your cost reimbursement, not some new earning. And especially for firms who do fee-based compensation or collection distribution. You are distributing the money between your partners and staff based on the collection. Super important. Otherwise, you end up distributing the money you are collecting as part of the cost, which is not really in the income. So it's just an example about. Now, why is this important, right? I mean, these small law firms might think that, oh, well, I don't want to worry about all these details. You don't have a plan B. This is not an optional wish list. It's not something, oh, it looks good or it looks pretty. This is a basic requirement of running a law practice. Either you need to have it or you need to hire somebody else who can do it. Or you need to put tools and technologies which can kind of help you doing this. Not doing is not an option. Sooner or later, it will catch up. Sooner or later, you'll have to pay somebody a lot of money to fix your bugs, right? Okay, so let's keep on going to the last two steps. Gain tight control on your credit card payment process. This is another area where a lot of law firms get into. I mean, they figure out overly complicated ways to save, couple of small dollars on your processing fees. Some will use PayPal and then try to move the money and try to recover the cost in different ways, processing feedback from the clients, and I've seen all kind of complexities around it, right? Or some will work with the merchants which are being recommended by their banks without knowing, do they understand what does it take to do credit card processing for law firms, right? And all kind of variations around that. So it doesn't have to be this complex. You need to make sure that you are working with a provider who understands challenges of law firms, right? And there's no better provider than LawPay. I don't work for LawPay. We are just a partner with them, like many other companies are. Why we work with them are because, and we, for our own business, we use LawPay as well. And we've been extremely happy. More important thing is they understand. We are not a law firm, so we don't have all these complexities to worry about, right? We just use them because they're an amazing provider. But from a legal perspective, right, they need to know, whoever you work with, they need to know how does the law firm works, how does the trust accounting works, where the fee gets drawn, what happens when the chargeback request comes, right? All those has to be handled by your merchant. Otherwise, they'll put you in my 12 years of experience working exclusively with law firm, one of the things I saw is that more law firms get into trouble because of their bookkeepers and their accountants and their credit card providers. Why? Because they end up hiring people who are not trained to do work for law firms, right? Bookkeepers, accountants, merchant providers. You need to create this team who have prior experience or willing to learn uniqueness of law practice. If they are going to do the same thing what they are doing for their other other type of service customers, software companies and many other type of companies they might be working with, they are not going to be doing a good service for you. They need to take time to learn the unique requirements of law firms, right? And same thing goes with the credit card payment processors. So you need to work with a provider who understands the requirement, and then you also need to have a setup internally. Again, it boils down to the same accounting setup. Because, so think about this, right? You're going to issue a bill from a billing system. Your client is going to pay money by credit card, right? The money is going to show up in your business account, which is going to show up in your accounting system. Now, how would you make sure that you are tying it up properly, right? How would you make sure that everything is properly reconciled? So, like, this is an example where it talks about what you need to look out in your merchant provider when you select the provider. Do they understand this? Do they understand, how does the billing works and how does it integrate? And when you look at your internal setup, you need to know when that money shows up in your business account, how would you know which invoices got paid? And one other thing with the credit card, when the money comes back, it comes up as a batch, right? If 3 of your clients paid today, you will get a single deposit in your business account. And if that business account is not connected with your billing system or not properly, you have no way to know that, okay, well, these 3 invoices got paid. Now you are manually telling your business account that, oh, you know what, this got paid and this got partially paid and all that. Well, that's where the problems can come. And again, the voids and chargebacks and the processing fee. Make sure that whichever merchant you are working with, they only take your fee at the end of the month. You do not want a system where they're taking the fee as they go. That's what they want. That's what they like, right? You don't want that. That's going to create a mess like you will not believe in your books, right? You want to make sure that the fee comes out from your business account and as one charge. You might see the breakdown. They might give you a report and give you the breakdown and all that, but you don't want to make 1,000 entries in your books for that. Okay, and the last thing, couple of minutes left. Start tracking income by party and practice area, right? Even if you're a solo, a small law firm, you have multiple partners, it doesn't matter. Unless you are just one person doing only one thing, it applies to you. You need a system where you can track your income. And again, I'm not talking about the cost reimbursement and all that. That doesn't matter. Your fee income, your earning, the amount you should be paying taxes on. You need to know which practice is making your profit so that you can do productivity analysis. You can see, look, I'm spending this much time and I'm collecting this much. This is your hourly wages on that, while another practice might be different. So this gives you an idea where you put the marketing dollars, where you spend more of your time, where you do more of your learning. Also by party, if you have multiple partners and multiple attorneys and multiple staff, right? You want to make sure that what's their income. It doesn't have to be a compensation input, right? You just want to know who's producing, who's the rainmaker, who's producing, who's doing the work, who's the working attorney, what kind of, they might be spitting out bills, and if those bills are not being collected, that's not an income yet, right? That's just going to be a write-off in the end. So again, important to run business as a business, not too difficult. You just need to know what you need and how to go about that. So, you know, I kind of harped around many times about this billing and accounting gap. This is something we have seen for, gosh, over 10 years now. And as long as your billing and accounting world looks like this, there is no other option but to hang in the air like that. Is just one loose connection, and you know what happens. You really want a system which is tightly connected. Either it's a tight, really tight integration, so that you do one thing here, shows up in another place. You do not, and make sure it's a bi-directional integration. Or people get confused many times saying, oh, well, I got my billing system integrated with my accounting system. Well, is it one way or is it two ways? If you make a change in your accounting side, will it come back in your billing side? Otherwise, you will have, again, very soon, you will find yourself into one thing saying something else, another thing saying something else. And now you are reconciling and sitting in manually and trying to adjust that out. So recognize the importance of that. Maybe it applies to you, maybe it doesn't apply to you, but more often than not, we see this to be a root source of bookkeeping issues. And again, with the year starting new, it's a great opportunity where if you want to get a handle on, you can explore these various ideas. So, you know, just to take like a minute, maybe even not even a minute, I just want to give you a glimpse of the system we use so that it doesn't feel that it's not possible, right? So in this system, there is no separate place for billing or accounting or this and that, right? You basically, you know, you go to the matter. This is where you incur your time. This is where you incur your cost. This is where you do your hard cost. This is where you receive your retainers. This is where you disperse. This is where you generate the bills. This is where your client pays. And all accounting simply happens for you because your profit and loss, balance sheet, trial balance, GL, AP, AR, all the reports, they are automatically updated. The fact that you are not going 2 or 3 different places, this is where you do your bank reconciliation. This is where you do banking, you know, this is where you print your checks. So just an idea. And again, this is not the only system of its type. There are really good choices you have as a modern practitioner. I mean, and you just need to know if does it make sense for you, right? So I'm going to go skip this slide. Let me just switch to the next slide. So this is one area where, you know, all can be done in a single login system, right? And then last I will show is that, you know, I'm an author to this book. If you ever want to get a good reference book, this book is not about Cosmolex. This book is really about law firm accounting demystified. What goes wrong at small law firms and what to do about that.